Good morning, I'm Joe Neighbour from Signal Centre, and today going to be running through some FX charts for everybody just to give you again a bit of an update on where we are looking to try and capitalise on financial markets at the moment using a technical analysis based approach. So first up, in terms of news and headlines that are going on in the markets at the moment, inflation is obviously a key word. We're seeing that prop up again and again, both in the US and in the UK. US hit 5.4% yesterday, UK over 4% today. So there are a little bit of jitters in the market, certainly around the word tapering. In the UK, they've suggested that this could happen soon. In the US, they are continuing to say that they're going to provide loose monetary policy, and therefore there's no immediate signs of tapering going ahead. But what we are seeing is potentially some money shifting out of riskier assets into safer haven plays. And when it comes to currencies, dollar index is considered one of the safe havens, Swiss franc is considered one of the safe havens, but also the Japanese yen is considered one of the safe havens. So what I have in front of you today is the Japanese currency index. So normally I'll look at the dollar index, but if you use TradingView charts, as your markets.com traders will do, then you can find the Japanese currency index using the code JXY. Now this again will give you a basket of all the Japanese currencies together, essentially providing you with an index to follow the ebbs and flows of each currency. So with Japanese yen, I've got a daily chart here in front of you, and just looking at this red channel that we've got on the chart here on the daily, you can see that price was moving lower, but in recent days we've seen quite a significant move to the upside. There's a big gap that occurred here on the 8th of July, so we quite clearly exited that channel with a big move to the upside. In recent sessions, we've seen a nice pullback to retest that channel and fill that gap, and now we're seeing the price continue higher. Now, is that a sign that a bottom is maybe forming in the Japanese yen, and maybe we're going to see a corrective move to the upside? If that is the case, then obviously going to have a knock-on effect to all the other Japanese currency pairs that we tend to look at on a day-to-day basis. So let's have a look at how that looks for some of these currencies. Now just taking a look now at some that I've highlighted. First of all, I'm going to start with Aussie versus the Japanese yen. Now this has been obviously in a huge uptrend for a number of months, but as you can see, since sort of February this year, the price action has been pretty range bound and sort of formed quite a big range on the daily chart. Now back on the 8th of July, the same day that Japanese yen gapped higher on that index chart, we actually saw an impulsive move to the downside with Aussie yen, and it broke through the lower end of this range. So for me, that confirms really that we've got a broken range here and potentially a large top pattern in place. The next day we did see quite a significant bounce back, but it has sort of stalled into this cluster of new resistance levels that we've formed that are all listed here in blue between sort of 81.98 to 82.28. So fading gains into those resistance levels appears to be the strategy for now. So for me, where do I think this is going to go? Well, if we take a measured move, so from the high of the range to the neckline projected lower, then we're looking at in a region of sort of 79.16 as a target on the downside. So plenty to play for on that one over the short to medium term. So that's one market linked to Japanese yen that I think could offer some opportunities for some traders. Euro yen is another interesting one. This had been trading in a really steady uptrend channel really since sort of October, November last year. We saw a big break of that on the 17th of June. Big impulsive move to the downside, but then we saw quite a substantial rally higher, but it only retested on the underside of the broken channel before then selling off again. Now, we retested these swing lows that we posted on the 21st of June. We actually got a close below that level on the 8th of July, but it did fight back quite nicely. So this appears to be a bit of a line in the sand. We are forming some supports around here between 129.62 to 130.04. So I think really if those support levels break, we're going to be in for more downside on this one. There's a lot of fresh air for this to move into on the downside. So I'd be looking to sell into rallies on this. If we look at sterling yen, still waiting for this to breach this kind of 151.31 support, and also we've got another support there at 150.66. So a fairly large range, around about 80 ticks or so, 70 ticks that we need to try and break down before we can think about more downside on this one. But if you look at it just from a price action perspective, you can see that we are sort of seeing some rounding price action here, which is often what you see at tops in markets. So I'd be concerned about that one as well, and particularly if we break below that 150.66 level, it looks like we'll see some more downside there. Finally, just going to rattle off through Japanese yen versus the US dollar. So this has been trending quite nicely higher. US dollar sort of performing quite nicely, as we've seen previously on the charts that I've shown. But we saw a breakdown of the trend here on, again, the 8th of July, that same day that we saw the Japanese yen gap significantly higher through that channel pattern. We saw a retest of the underside of it, so technically that's worked quite nicely, and we've seen the sellers step back in. And here we saw a really large engulfing candle on the 14th of July. For me, we're going to see more downside on this one. So what we're looking for is to take out this support level here from this swing low on the 8th at 109.53, then we can start thinking about lower prices. So in terms of strategy, anything linked to yen at the minute, I'd be selling into rallies, expecting more yen strength to occur in the short to medium term. Hopefully that was useful. I'll be back next week and we'll have a roundup on how that's done. Until then, trade safe. Goodbye.